two, three. Like even though these are technically green candles, you can understand they're not. There was no bounce. That's the main thing. There was no bounce. There was no rally. One, two, three, four, five, six, seven, eight. Eight in a row before you had an actual solid green day. And even that wasn't much. Here, one, two, three big ones. Then it stopped a bit. Four, five, six, seven, eight. The point is, when you're going through this and you're looking at this, it's far more likely to just cascade lower today because there's momentum. It's not because everyone's so bearish, everyone's short, it shouldn't be able to go. It doesn't matter. Like, just like on the way up, and this is the point I was trying to make, just like on the way up, you could have got long here, and you could have got long here, and you could have literally bought the top here, and you could have bought the top here, and you could have bought the top here, and you got away with it on any of those moves because the underlying momentum was with you, right? The direction of the market was so clear and so strong that even bad entries got rewarded. That might be where we're at with Bitcoin right now if it's actually unwinding. And so how will that look? It's obviously going to start with yesterday's low breaking. And yesterday we had a dovish Fed meeting, undeniably, right? That was far more dovish than expected, and dovish basically means bullish, right? Where Powell was talking about they're going to slow the pace of QT. So currently the Fed are doing quantitative tightening where they reduce the amount of liquidity in the market, which is negative for liquidity, right? When they printed all that money in 2020, that's called QE, quantitative easing. Now, they don't actually print money, but for the purpose of this, we'll say they do. When they printed all the money, that was quantitative easing. And because they printed so much, inflation got out of control, so they decided to let that roll off their balance sheet, it's called. Reduce the size of their balance sheet, because it's just debt. It's just like an issuance of debt by financial institutions. And when they let that roll off, it's at a rate currently of about 60 billion a month. So when they were doing QE in 2020, it was 80 billion up as high as 120 billion a month that they were pumping in. For the last year plus, they've been taking out 60 billion. And they announced yesterday that they're going to reduce that in June, not now, which people seem to have overlooked. In June, they will start to reduce that to 25 billion from 60. So they're going to reduce the pace of QT by 35 billion, which is very good, right? It's a step in the right direction in terms of, money printer. So that was announced yesterday. That's bullish, undeniably. Should be, right? And then he talked about most of the rest of his meeting was quite bullish, saying inflation is we're still monitoring inflation. It's coming down, but it's stalling a little bit. That was probably the most hawkish part, which wasn't even that bad. Said that the economy is fine, but it's starting to slow. Some signs in the job market of this and that. So the general consensus yesterday was the Fed meeting was pretty dovish. Now, news events and the reactions are all telling. We got that strong rally because it was perceived to be bullish for the markets. But as soon as we got that underside retest of the previous breakdown, sellers took profit. They got out. They dumped. And you can see this with the mass outflows. People were just getting out of Bitcoin at this point. So if people were selling as much as possible on that little bounce into there, and that was only 12 hours ago, 18 hours ago, I don't think they're going to suddenly turn to bulls now and pump price into the 60s. It doesn't make sense. It doesn't square up, right? That was a bearish reaction. The entire thing retraced within 1 hour candle. If you remember yesterday, I was saying that I would expect that there would be a rally at the FOMC, right? I said we would dump into it. I thought we'd sweep the lows, we didn't. So we'd dump into it, we'd rally, and then like on Thursday we might stay green, and then on Friday we reverse it, because that's quite a typical FOMC. You pump one side, you distribute, you come back down. Well, we got all that, but it was speed ran into just 2 hours, which to me shows real weakness. And when you say weakness, it's not even weakness. It's just this is the trend. The trend is down. So the trend is down, and when the trend is down, you sell bounces, right? That's what smart money do. They sell the bounces, and so we got another bounce, and they sold it. And unless sellers have ran out of coins, which I don't think so, because we've seen a real crack appearing in the ETFs with 500 million of outflows. You look at that on one side, which I do think, right? I think that could be a sign of the panic selling that marks a bottom, but it's too early to say. And even if we go lower for another day or two, that can still be the bottom, right? If we saw today it goes lower, tomorrow it goes lower, and there's heavy outflows on both days, and then price starts to stabilize, and people are worried about more outflows, that would be like the 3 days would be, or however many days, right? The 3 days would be your overall capitulation on the ETF, weak hands. I think that's true. The problem I have with people trying to call bottoms again today is that you can't just call bottoms every day in a downtrend when it's unwinding and leverage is liquidating. So yes, yesterday could have been panic selling. Yes, it could be a bottom. But I don't think you want to step in front of that train when it's unwinding, because it can unwind way more than you think and get way uglier than you think, way faster than you think. And when you're in these, like, we have not seen a capitulation candle yet, right? There's still quite a build-up of open interest. I was looking here. Here's the order books, just for anyone who's interested. There's no real bid support till about 56, below the recent low on Binance. Coinbase roughly the same, but there's nothing there that would indicate to me that the market's gonna hold up here, because on the way down those get torn through. On the individual exchanges, since the lows, when price has been rising, there's about 300 million on Binance and Bybit built up, and I think a decent amount of that's longs, because as price has been rising, funding rate has been moving positive, and the spot premium has been disappearing, and as open interest rises and price rises. So I think there are definitely longs trying to long the bottom here or support price. There's always shorts too, but my point is, when the direction of the market is so strong, the shorts can get away with it. Just like you can get away with bad longs on the way up, you can get away with bad shorts on the way down. For a while. Not forever. There will be an aggressive squeeze at some point. But this happens over and over and over again. People try and predict and guess the squeeze way too soon. And they forget that it's just a downtrend. It's a downtrend. Right? There's still a build-up of open interest on CME, as I've talked about. I'm showing all this because the time when all this is at risk of getting forcibly closed is in a downtrend like this. And so Bitcoin, how's the open interest looking on BTC, right? So just since the January lows, so I mentioned that there's 4 billion of CME open interest still built up since the January lows, right? 4.2 to 7.8, there's 3.5 billion. On BTC since the January lows, there's almost 6 billion still built up, so that's across the other exchanges. So you've 6 and 3, you've 9. You've actually got 10 because it's 5.7 and 3.5, but let's call it 9 to 10 billion of open interest positions that are still open from January, and some of those are long. Not all of it. There's shorts and longs, of course. But there's still a lot of OI that can be wiped. We have not seen a wipe, right? We had a wipe out on the 13th, but on this decline, which should be worrying people if they're trying to get long, on this decline, where we've broken structure levels, there has not been a wipe. There has not been mass liquidations on Bitcoin. It's all relatively tame so far. That is not a bottom. That's not a bottom. If you're a data trader who trades liquidations, who trades open interest wipes, who trades resets of funding, short squeezes, etc., we have not seen the leverage liquidation, big candle, big, wick, big liquidation wick, like August 2023, like the 3-day dump in March 2023, like any of the bull market dumps before, like the 7th of September or the 21st September of 2021, like even in the bear market, the 4th of December, right, where you grind, then you have the big one, and that's the bottom. Right? If that happened now, I'd consider that the bottom. Back in 2021, it was the start of a bear market. I don't think we're starting a bear market. If we did that same kind of move now, I would say that would mark the next bottom, and we go sideways and we'd rise up. Again, it doesn't have to happen. right? But I look at it and think the candles we're putting in right now look more like this, right? They don't look like this. They don't. You don't have the big liquidations, and you can say maybe this time is different because that's really the argument. Maybe this time's different. Maybe Bitcoin's not going to have a massive liquidation event. Maybe there's not going to be a big panic-driven sell-off candle. I would just say I would take the other side of that. Doesn't mean I'm going to have to short here. I'm certainly not going to be getting net short or doing anything other than day trade short at this point. But for people to say that Bitcoin, the most emotionally driven reflexive asset in history, is going to just have a nice smooth bottom here after breaking 60k with no big wick, no liquidation candle, I think that's crazy. Frankly, I think it's crazy. So maybe I'm wrong, and I absolutely could be, but I would much rather see a couple of, those big spiking candles first, right? Where there's a big spike down, then it recovers up. So you see a big long wick, and then price starts to hold, and there's a big deep wick there that indicates people have really panicked. That's where I would bid. And I think the market's going to keep selling off until that happens. And so unless you get a real reclaim, which for me would be 60k, right? And that's going to be multiple daily closes, reclaiming 60k. Unless that happens, I think it's just a matter of time and chop before we see a big spike. And hopefully that's the next one. Hopefully the big spike's just down into 52. And then that could be it. And then we can drift down into it and price can look bearish. But that big wick, the big spike, again, I can't repeat this enough. It might not happen. But as a trader, I don't want to deal with my opinion. I have to have some kind of plan. So my plan would be, if that big wick comes, I'll consider the bottom to be in. If that big wick doesn't come, then I need to wait for days or weeks for a bottom to form. Like, we never saw one here on this decline. There was no big liquidation event in this decline. It ended up just holding and bottoming, and guess what? You could just bid it when the structure broke, when you got a bullish market structure break here. And then it rallied up. But it also wasn't time, and we did get the big liquidation, and it happened to be 2 months later. Right? So the market's not going to just nuke down to zero today because I think there should be a big liquidation candle. I'm well aware the market does not do what I want it to do. So we'll see. We'll see. But that's it. Overall, I think momentum-wise, this could be the area where it collapses. So just to keep just keep your wits about you. It's not a place to be bidding like a hero, in my opinion. Give it some time to actually build up a bottom if it's going to be.